Hello traders, the title of the video is Advanced Fibonacci Trader Reveals a Hidden Fibonacci Retracement Strategy One Must Know. Alright, so today is the 1st of January 2019. Happy New Year to you all. Alright, we want to talk about advanced Fibonacci trading, talking also about a hidden Fibonacci retracement strategy. The strategy that I'm about to share with you today, probably you do not or you have not yet heard about it before. If you have, let us know in the comment section. Sometimes they say, yes, George, I already heard about that many times. Oh, all right, but that's not true. Okay, now the point we want to share with you a very simple, but powerful Fibonacci retracement strategy. We see that very often when a price form the chart pattern that we call ABCD. So traders that are very new to the topic of ABCD chart pattern, I go to www.stochastic-macd. There are two web pages. One is talking about ABCD, and the next one is talking about ABCD pattern extension. Okay, very fast. I want to show you something. Alright, so in fact, I'll go there now. Stochastic-macd website, and I want to point something to you because to help you navigate that website very fast, just in brackets. Okay, bear with me, please. It's not going to be too long. Here we are. So this is a Stochastic-macd website. So if you want to find that web page, you just put your cursor on more. You see, there's more here. Alright, and then just go vertically like this. You see the spot is highlighting the pages until you come to that ABCD pattern web pages. You will see, you just go gently. Alright, if you go to the left and the right, alright, that drop down menu will disappear. So you need to keep your cursor in that vertical position as you are scrolling down. Here it is, here the ABCD chart pattern. There is another web page that is talking about ABCD extension. So just look for those web pages. All right, so which Fibonacci strategy is hidden, George? All right, so if the price goes from point A to point B and then pull back again and continue to go up, all right, after going up for the second time, from C to D, all right, so first time it goes from A to B, yes, that's the first time, okay? Then he pull back to invite people to buy again, people respond, they buy again. Now the price goes up again for the second time, all right? So for the second time, it went up nicely. Now it start coming down. That's the moment where we will start applying the hidden Fibonacci retracement strategy that I'm about to share with you. So if you look at this stock here, talking about IBM, International Business Machines Corporation, all right? This is a market leader for the Dow Jones Index. So if you are trading Dow Jones Index, you need to pay attention to the market leaders of Dow Jones. And IBM is one of those market leaders. In fact, today I have so far recorded how many videos? Well. This is my 5th video today. I'm talking about the first video was a market geometry trader looks back at his Boeing stock analysis. The second video was Fibonacci extension trader explain his McDonald's stock Fibonacci strategy. So those videos I'll be posting them one by one. So probably it's not yet posted at the time you are watching this, or it's already posted. So you to search for those titles. And the third video was how to combine market geometry and chart pattern to trade precisely Caterpillar stock like a pro. So Caterpillar stock is also a market leader for the Dow Jones Index. And now we are talking about advanced Fibonacci trader reveals a hidden Fibonacci retracement strategy that one must know. And we are looking at IBM stock. For traders who are interested in upgrading their technical analysis, they must learn to master what we call, market watch. You go to www.dprotrader.com and you check here. Here it is, market watch. You don't have to click on you don't have to put your cursor more. It's just there. Look for a market watch and try to familiarize yourself with the market leaders and most importantly, how to use them. So you say, Joe, you have been talking for how long now? 5 minutes. I'm still waiting for that hidden Fibonacci strategy. So I go from A, B, C, D. After the second move up, all right, we can apply that hidden Fibonacci extension, Fibonacci retracement strategy. So you apply Fibonacci retracement for the first leg, A to B. That's what I've done. You pay attention to the red lines, the red dotted line. So, and then when you do that, you apply Fibonacci retracement to the A to B. You highlight the 50% and the 61.8% Fibonacci retracement level. You may say to me, Joe, that's the sweet spot zone, and I'm not interested because I already know about it. And I say, you haven't seen anything yet, my friend. So highlight the 50% and the 61.8% level. All right, those are the two lines I have on my chart here. So I'm going to color the 61.8% level into orange. I have a reason for that. And the line above is the 50% retracement of that A to B. All right. Now price start going up again. Now we are talking about from C to D. That's the second move. From here it start going up. Boom, 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 boom. It went up there. But because of my experience, you may say, George, I don't care about experience. I say that's a completely stupid thing to do. Never discount the experience. Now this is not to insult traders, all right? This is not to insult traders, just to say that you don't discount experience ever in life, okay? So the point I'm making, because of my experience, I did not draw the Fibonacci extension from this point here, but I choose this point here. Why? Because you can see that the price came down 1, 2, 3 to this low here, but then it went up from this low, and then the price went up a bit and come back to this low. So it didn't come back to this one. So instead of drawing my Fibonacci retracement from here all the way to the top for the second move, I choose this one here because the price validated that level here, 7459 as a support level. So that's why I choose it from here. But don't worry too much, all right? Don't worry too much about it, okay? Some trader may put it all the way here. But what the price did, the price after going from A to B, it consolidates. So this B to C is a consolidation session. So when we are talking about consolidation, we are talking about two key levels, the resistance above and the support. I choose this line as the support because the price we test it first time, second time, third time. This is just a bit of exaggeration here. So I explain to you why I choose this point. All right. So when you apply the Fibonacci retracement to the second price move from this point C to point D, I told you already that the price must start coming down from point D before you can apply this strategy. Do you promise me that you'll never forget that? Instead of chasing the price and using the strategy as the price is not going down yet, the price must start changing direction, which means minimum the second leg, we want a common satellite to be broken and start going down before we apply this hidden Fibonacci retracement strategy. It's critical. But if you forget that, you go and do something else, that's your own Fibonacci trading strategy, not mine, okay? All right? So when you apply it for the second time from C to D, you highlight again the 50% and the 61.8% level. Like I did previously here, I highlight, okay, the 61.8% level. I'll do the same thing for the second leg, and I'll highlight the 61.8% Fibonacci retracement level. Have you ever heard about this before? And then we'll use a measuring stick between the two 61.8% level. So the first one is 61.8% level, and we draw a line vertically like this to the next 61.8% level of this move from C to D. Once we have that, you see, the measuring stick, all right, I'm going to tell you now what you need to do. You will highlight the median line of that measuring stick, so somewhere there. So what we are doing, we are dividing the length of that measuring stick into two. So we have another key level between the two 61.8% Fibonacci, okay, retracement level. Normally, I should be charging you for this. Sometimes they may say, oh, George, you're talking about money again. I will mark this video down. Go ahead, please. Now, the point I'm making is that it's an essential tutorial, all right? Something that I'm sharing with you, and I hope you take care of it. So if you give gold to children and they are playing with it, you'll not be happy. That's what I'm saying. So talking about charging traders, it's about saying that this is a very important topic, and don't just walk on it, all right, or throw it away like a hot potato. Oh, so you're thinking about hot potato now with all right, cream inside it. Oh, all right. Okay, jack potato. These American Texas dishes, all right? Jack potato with cream inside it. That's very nice. Okay, now, so you highlight this 61.8% Fibonacci retracement of the first move A to B, and also the 61.8% of the next move. All right, as I explained to you before, I'm not going to go over it again. And then you measure the wave between the two 61.8% level, and that's the pink line here. And that's a very, 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 very important key level, because as the price start coming down from point D, sometimes you'll see this is what it's trying to do here. Does it mean that it will definitely do that? It doesn't mean that it can't do that. Sometimes you see that the price will come down. You see, that's what it did. Okay? It will come down to the 61.8% level, which is the sweet spot zone of the second leg, like this. And then sometimes trader will push it back up again, like this. Be careful, my friend. All right? And then he will try to pull back again. Sometimes he will form, you want to understand what is happening, sometimes he will form a double bottom there at that 61.8% level. And rush out again. All right. If it doesn't find support there, then that's where we pay attention to this pink line. So as this price is going down now, because it did not form that double bottom chart pattern there, professional Fibonacci traders, will be watching that pink line, 9471. So if you are trading IBM stock, be aware that the target that is headed to is what? 9471. How do I know? Because, all right, I am advanced Fibonacci trader, whether you believe it or not. Didn't I say also that between two key levels, there is always a median line? So between the 61.8% level of the second leg and that pink line, there is also a median line. Have I said that before? Yes. So watch out for that median line also. This one at 111176. That's where the price is sitting now. You may say to me, how the price can sit, George? It's an expression. That's where it stopped. That's where it closed. All right? Okay, so there are phenomena that are happening in the financial market quite often. And if you keep your eye wide open, you can spot them. And when they are happening, you can take advantage of it. That's how I discover this, price structure. Now this Fibonacci retracement strategy. Some trader may say to me, George, you are just inventing it. No, I'm not inventing it, because I spent so much time looking at the chart, many charts, all right? So I can say that I have a bit of experience, all right? So all I'm saying to you, very often we see it, right? We see it. It happened before, it happened again, and it's happening again now for the IBM. That's how I spot it. That's how I'm talking about it now. Try to go from A to B. We had at the 50%, the 61.8% Fibonacci retracement level. Try to pull back to that zone, start going now. Now the second leg, C to D, All right, start going up again. Yes or no? Okay, we as a common settler, it's a very important condition which I do not want you to forget. That's why I keep banging on it non-stop. If I can stick in your brain, I will do so, but we are not allowed to do that. All right, you get a message? It's too important. If you start going down like this, now we apply Fibonacci retracement to the second layer, which means from C to D. All right, and we highlight the 50% and 61.8% level. 50%, that's the black line here, and the orange line is there. Next thing, we draw a line connecting the 261.8%, or the first one is 61.8% level, the next one is there. With that measuring stick, we divide it into two. We have the pink line, that support level. You do not want to forget it, my friend. It's that support level between the 261% level, you do not want to forget it. It's at 9471. As the price going down between the second, okay, 61.8% level at 12755, heading down. We want to remember also the median line between this level, which is the median line of that measuring stick, the peak line, and the second 61.8% level. That median line is at 11176. So it's not by mistake that the price did close there on the 31st of December 2018. You see, it's not by mistake. Somebody knows that. Somebody understands that. That's why the price did stop there. So the scenario that we often see, which I explained to you, is that the price will come down like this. As you see, come down, you will go down to the 61.8% Fibonacci retracement level. You see deep a little bit below it before turning around. See that tail, you see that there is a support there. There are buyers in this zone. Come to 61.8% level, you rally up a bit. I don't want to talk too much. I can say that very often this move up, okay, very often will stop at 50% Fibonacci retracement of this move from here to here, or all the way down here. I don't want to dwell on that. But as you start going up from A, B, C, D, start rolling it down, which level do we watch? 61.8% of that C to D. Rendezvous. It came. It did. Start going up. Watch out for the 50% Fibonacci retracement level of this move down. Watch out for that zone. If it start coming down, which level should we watch again? We will prefer it to come back again to that 61.8% level again. Was it there? Yes. You see, some people stop it there. Professionals say, no, we want to retest again that 61.8% level. All right? Now they were very, very bearish. Were they drunk bearish traders? Now they push it below that 61.8%. If it goes below that 61.8% Fibonacci retracement level, which level professional watching? Here it is. 11176, which is the median line between the second 61.8% level and the median line of the measuring stick between the first and the second 61.8% level. As the price is crashing down at it, because it has failed to form a double bottom chart pattern here, all right, we will be saying that there is a high chance that so if it's going down from here, we see first target, the median line between this line and this one. The ultimate target is the pink line right there. If you break below that, all right, there's another support here. So this is about advanced Fibonacci trader reveals a hidden Fibonacci retracement strategy that one must know. You must know that. Now, this is something new to many traders. How do you handle it? Use a demo account. Don't go straight away placing trade line. That's what sometimes traders do. They watch video on YouTube, they go and place a trade, they lose, and they come back and back the video down. All right, don't do that. Don't do that. Okay, use a demo account. Practice, practice, practice. You will notice as you are practicing that okay, it's not as straightforward as it is, because all we are doing, we are not just buying here or sell here or buy here. We are looking for trading setup around those key points that I'm mentioning to you earlier. When we see a trading setup, we implement a different time frame trading method. So the setup plus the different time frame trading method will allow you to control the risk and that you may get paid. All right, this is the thing. You do not use a different time frame trading method. If there was no trading setup that can generate a valid trading signal, the rest is just a speculation. It's like a jump in the water, hoping that it's warm, okay, when the water is completely cold or icy. You don't want to do that in London when it's okay, winter. All right, you will check the temperature first, or wear some garment that will protect you against the cold. If you want to jump into the same thing we do in the financial market. So you see here, as the price was coming down for the second time to form a double bottom, expected double bottom chart pattern, there were people rushing here buying because there was a support here. They were just buying. When people saw them down, they were just buying here. Well, why do you buy? You will buy if there's a signal. All right, if there's a signal, you buy. If there is no signal, you don't buy. If there was a signal and you buy and the signal fell, you do not have to wait. You close the trade. You just close the trade. That's a losing trade. It happened. Close it. Blink, 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 blink. Wait for the next one. Because now you know how to trade. You do not have to dwell on trade that are losing trade. You just close them and move on. All right? So this will conclude our discussion today about advanced Fibonacci trader reveals a hidden Fibonacci retracement strategy that one must know. I hope you too will give value to this video and put it at the top of the list instead of burying it under all kind of useless video on YouTube, so other traders may also learn from it. If you think this video is an essential tutorial that can help other Fibonacci traders, feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr. I like traders that are sharing our video. All right, it is important to share it. Okay, if you want to share it, and I really appreciate that. So you may say to me, Joe, you want a quarterly chart? Can we use it on any time frame? Yes, you can use this strategy on any time frame. You'll see sometimes even on the 4-hour time frame. All right, 4-hour time frame. All right. As a TSTW24 trader for data, you can use that. So you can combine the 4-hour time frame and the first best time frame. You can combine 4-hour time frame and any lower time frame. So A, B, C, D. All right. Do you see A, B, C, D pattern? All right. So another trader here is not very clear. Okay, this is not very clean cut here. You see, so price went down. You can see A to B. Okay. Now it rallied up a bit, but this move down is a bit messy. But if you think of it, yeah, like this. Okay. So this is in a downtrend. The first one I'll show you is an uptrend. So 1, 2, 3, A, B, C, D. Yeah. All right. Now you apply Fibonacci retracement to this one. You highlight 51. So if you start turning around here, which means if the common central is broken here, those are the level you want to watch. You 61.8% on the first leg, 61.8 for the second one, and then you draw it. Another thing that I forget to mention, which is very important, because I don't want the video to be too long. I'm under time pressure. So 22 minutes, I need to wrap it up now. That's why I need to close it now. Another thing that you do, this measuring stick that you have there, you can use it at every pivot point. So for instance, if the price comes to this point where it is now, and find a support and start turning around, you see here, suppose here is a final support start turning around, you put that measuring stick at the turnaround point, which is a pivot point, and set a target there. And you will divide that measuring stick into two. You will have a midpoint target, okay, and also ultimate target. Like here, as the price reaches this level, start going up. You see here, you put it here, that measuring stick that I showed you already, you put it at the pivot point, and you set this one ultimate target and midpoint target. And it's near the midpoint target that the price turn around there. So anytime the price form A, B, C, D chart pattern, and you apply this strategy, so you have done it as I showed you already. If, for instance, the price come all the way down here, all right, after the A, B, C, D, and start turning around, you will place that measuring stick at the pivot point, and you will use it, okay, to set the ultimate target and the midpoint target. All you are doing, you are looking for essential key level where there will be a reaction, where a high probability trading center is likely to be formed. And when that is in place, now you will implement a different time frame trading method in a composed fashion to take it like a pro. All right. If the video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, mark it down. If you think it's an essential tutorial, feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr. I really like it when traders share our video. All right. Our YouTube channel, subscribe to our YouTube channel today. Our YouTube channel is Day Pro Traders. YouTube channel, subscribe, and be sure to click on the notification bell. So anytime we are about to live stream a pre-recorded video, you will be the first person to be notified. Sometimes I post video first on Facebook, sometimes first on YouTube. My Facebook page is stochastic-MacD. As I promised, this year, 2019, I will be recording more live tutorial, and this strategy, I will use it in live recording, live day trading, showing traders how I apply this hidden Fibonacci retracement level. All right. Do not be afraid to share this tutorial because I make it public now. All right. Share it with your friends so they may also learn from it. It's a powerful, Fibonacci retracement strategy for day trading, even scalping. You can use it to forecast the market. You have a bit of idea. Well, you see how it came down to the 61.8% level. How do I know? Okay, now it's not going. We are watching. Okay, the 50% Fibonacci retracement level. This move down. All right. Or I will use this measuring stick and I'll put it at the pivot point, ultimate target midpoint. If you find a support here, I will do the same thing. So I'm now having a bit of idea what is likely to take place. All I'm doing, I'm looking for a trading setup first. I find a good one at the key support level, key resistance level. Then I implement a different time frame trading method, breathe in, breathe out, and take it like a pro. Use a demo account, master it first before going live. Until the next time, enjoy yourself and be very happy. We are the TSGW24 traders talking about advanced Fibonacci trader reveals a hidden Fibonacci retracement strategy that one must know. Thank you for watching, and I will speak to you soon. Happy trading to you all, and also Happy New Year 2019.